We've got Alan Nuckman, the Chief Market Strategist at Agora Financial, joining us, and he always, delivers on quarterlies. Alan, thanks for joining us here. Welcome to Midday Movers with Lichtenstein. Let's take a look at home builders. I saw Toll Brothers, I saw Pulte, I saw D.R. Horton attracting some attention today, not only with the new home sales data, but also with Raymond James providing some comments. Let's begin with ticker symbol TOL. They have them as an outperform, now up from a market form with a price target of 55. What are you seeing with the stock?
Well, pullback in this sector. This sector has been absolutely straight up. Now today, it's double the downside of the major market. So it was down about 4%, whereas the stock indexes are off about 2%. So let's look at this as maybe an opportunity here in an overall bullish trend. Toll Brothers is 10% off its highs October 5th. Pulte is 15% off its October 9th high. If you look at the sector, XHB, it's up 125% off the lows. So the sector is strong, but you're seeing, I would say, a profit-taking pullback. And I listened to you this morning. You were talking about the, the home buying firmness. And really what it's come down to, not saying it's good, but it's really a have and a have more. People are buying second houses and third houses. It's a whole different ballgame than it's ever been before. But look at the moves that we've seen in these home building stocks. It's been, exponential straight up moves.
Yeah, okay. I've got another chart to take a look at here because it wasn't just Toll. If we could just take a look at, again, we've got others to pull up here. Again, I pulled up that XHB chart, but also, we've got DHI. We also have D.R. Horton. We also have Pulte on the move lower now. I do want to point out this comes with rates on the rise amidst a lot of concerns associated with some of the corona numbers, but also if we could take a look at the number this morning, it seems like, Alan, I commented at the top of the show, it's like a fourth week in a row, third at least week in a row with a lot of focus on housing. I can understand with it being the pillar of strength, investors are going to kind of lean on this one, but I don't know if there's much to lean on in terms of the new home sales number today. We always say one data point does not a trend make. How concerned are you about this number today and the sell-off here related to? I mean, is the roof on fire, Alan?
Well, as I've always said, and you definitely have said in the past, that one day does not make a market or make or break a trend. So let's see how things respond, see what happens in the next few sessions, where we are by week's end. Now, you talked about the rates rising. Now, let's remember that the TNX, the 10-year yield, which most mortgages are based off, made multi-month highs, high since June on Friday. Now, what happens in days like today, where you get everybody a little bit excited about the market moves, you see sometimes a flight to quality. Now, bonds did rally, and the TNX has come off, but not significantly. Yeah. Let's look at the Treasury bonds. The 30-year bond has gone, from 182 down to 172 in the last couple of weeks. It's bounced up to 173 today. So just a minor, baby bounce in bonds. So it's not a big scare flight to quality buy there. And you're seeing yields come off a little bit. Like I said, I thought they were overdone. It's just my opinion. I thought they were overdone on this firmness in bond yields. We were up to 0.87 on Friday after, getting below 0.5%. So I think at some point the reward to risk is more on the downside for yields, and that should be positive for home builders. I don't think there's any way, shape, or form that rates can sustainably go up. For many reasons, politics would be number one.
Still below the June lows, still no stimulus, and still increasing coronavirus numbers kind of feeds into that narrative. How about Tesla, Alan? I saw they increased CapEx outlook to $4.5 to $6 billion for each of the next 2 fiscal years. More electric car and battery factories to come, I guess.
Yeah. I'm not going to try and comment on what I think Elon Musk has in his plans. He's the smartest guy we know. Never doubt Elon Musk and Jeff Bezos. I'm not a fundamental guy, but that's one thing that I have certainly learned. It's 18% off its September highs. It's still up 525% in the last 52 weeks. So to, interpret that information as a positive or negative, I don't know. Tesla today is down less than 2%, whereas the market's down more than that. So, it is what it is. Again, I'm not the guy that's going to try and outsmart the smartest guys in the marketplace.
All right. Something to watch here. What do you think it's going to take, Alan, to break us out of this range? Again, aside from kind of really digging deep into the fundamentals, you know I'm much more of a technical guy as well, but you can see a pretty well-defined range right now. They've been providing pretty good quarterly results on a fairly regular basis. You would think that that would provide the next momentum, the next leg higher. I mean, maybe some sort of initiative on behalf of the U.S. to provide more incentive to EV purchases. I mean, there's a couple things out there. I guess I'm wondering what could provide the potential catalyst here, the next catalyst.
The future is going to be a positive for solar and electric vehicles and in those alternative energy sectors. So I wouldn't look at anything to knock them down anytime soon. It's just you need a pause after that kind of price movement. You just need to take a break, and people have to reevaluate. And consolidation is a positive a lot of times. So consolidation often leads to continuation, and again, that's what I would be looking for. It's just hard, to trade the Tesla because of the high price of the stock. I'm an options trader. We all know that. But it does limit some of the some of your flexibility. Yeah. If they did something like Apple, when Apple traded down and did its 4-for-1 split, that made it a little bit more palatable for a lot of option strategies and a lot of ways to play the market. So it gives you greater flexibility when you have a lower share price. Not that it means anything. I'm just saying out loud that Tesla's somewhat of a challenge because of that.
All right, Alan, we'll continue to watch these names. You have your eye on them. We will also. Alan Nuckman, ladies and gentlemen, is the Chief Market Strategist at Agora Financial, filling in for us this afternoon. Appreciate that, Alan. Thanks for giving us part of your Monday afternoon. Ladies and gentlemen,